here. If you could share your charts, please go right ahead and do that. And what do we got here this morning, Joel?
We're ripping. Instead of
If you could
dipping,
share
we're
your charts,
ripping.
please go right ahead
Strong
and do
close,
that.
strong after
And
hours, thanks to
what do we got here
Tesla.
this
And boy, they just kept on going. You never even got a chance to see that closing price at 55.50. We're up 41 3/4 handles at 44.97 1/4. Not much in here, folks. We are trading above last week's high. Crude up 98 cents at 103.17. Who needs gold in this market? Gold is trading down $15.50 at 1940.10. Silver, not only is it under 26, it's under 25, down 56 cents at 24.71. Hey, let's get risky. Let's buy some Bitcoin, up 1370 at 42,605. And Ethereum moving lockstep with it, up just about the same on a percentage basis. You have Bitcoin or Ethereum futures up $93.50 at 31.62. We're going to bring in Triple D, and he's going to tell us how many trades he did in Carvana last night.
I watched that thing. That was crazy. That Carvana. Wow, that Carvana. I don't even know what to say about that Carvana. Everybody's going to be talking about Tesla, but all I can talk about is Carvana because that was a crazy, crazy, crazy night for it. Bring it up. The charts won't even do it justice, probably. Get Twitter off there. Who's talking about Twitter anymore? The Twitter story's over.
Relics.
The Twitter story's over.
Oh, it's over. It's over. Okay,
it's
so
over
what's
until we get more news. It's going to sit here and do nothing until we figure out whether there's deal or no deal. We already discussed that one yesterday.
Before you go into the price action, do you know that I lost a lunch bet with you on Carvana?
Huh? When?
Yeah, a long time ago. You remember this, Spencer?
Really? You're fessing up to it too.
Yeah,
I like this fessing up.
I think it was trading like around 260, 270 or something.
It was like bullish or bearish.
You took 320 or something like that.
Whoa.
And I took 220.
And I won?
Yeah, you won.
Genius. You got to go with that momentum.
Yeah.
Anyways. I tell you couldn't go with the momentum last night, though, in this thing, Joel, because the momentum was clearly to the downside. We're going to throw us to Spencer Israel here now, because this was a disaster that all of a sudden everybody decided that they had to buy.
Yeah, I mean it's been a disaster. To be clear, for about a year now. But anyway, the earnings per share. I guess we'll do this, and then we'll go to Tesla. The earnings per share for Carvana in the first quarter, $2.89 loss versus an estimate of $1.42 loss. On top of that, they said, so that whole guidance thing. Yeah, we're not going to be doing that anymore. No more guidance for us. We blame the economy, blame inflation, but we ain't doing the guidance thing. Margins came in extremely weak, way below where the street was expecting, and on top of that, doing a $1 billion stock offering. So, not a lot to like in the report.
Yeah. So what I found interesting as well was why would they report this disaster and then do the offering? Why didn't they do the offering like a week ago? You knew you were going to be bad. Some execs had to know the numbers weren't going to be good. Why did they not do an offering a couple weeks ago? They knew how the quarter was shaping up. So you're going to do the offering after your stock's already been killed. That makes a lot of sense. But what makes absolutely zero sense is the rally that we had after all this bad news came out. So all this bad news, the stock just collapses. It goes down all the way to $68, down 30% from the 4 o'clock close. And then all of a sudden, something, I don't know if there was a comment or what happened, but they decided that they had to buy this thing after the offering, after all the bad news. They start ripping this thing higher. And for the next half an hour, they rip it up back through scratch all the way up to $105. It rallies 50% from the $68 low in the next hour, and then slowly leaks it away, and now we're down 20 points from where it was at 6 o'clock. So if you think you could trade earnings and it's just going to be easy peasy on the short side, if they're bad and they're going to go up on the good, this shows you, like, holy mackerel, the people who were selling that were puking their guts out about an hour later. And then, it comes and starts to go back down again. So who knows where this thing's going to go? Price discovery mechanism just lost on this one.
Completely. Joel, you're on mute.
Joel doesn't even know what to say.
No, he's on mute. He's on mute.
He says I have nothing to say.
I would have
was
been
perfect.
if we were in the bright office trading, okay, after hours. I would have encouraged you. I wouldn't have done it, but I would have encouraged you to buy 71.56
Why?
because that was a monthly low in May of 2020.
And you would have been making money, Joel.
Yeah, well, I probably would have told you to sell it at 68 too. But
and when it took it out, you'd be like, "Oh,
Yeah.
big stop out, $68."
if you would have caught it on the way back up, but how's this for a theory? I was listening to Charles Squawking yesterday, right? And I
Yes.
heard just a ton of options activity in this
Yes.
stock.
Yeah.
So is it just people just like laying on the options heavy and knowing that they could get this thing wild in the after hours? Like if you're buying, the only reason you'd be buying at 80 and 75 and 70 is if you were short or owned 100 puts, right? Because you wouldn't be, unless you really just wanted to get long it.
There's
And then
lots of people that buy dips no matter what.
Yeah,
don't
okay.
underestimate the power of the buy the dipper. They are out there.
Okay. All right. I would just say if I'm watching this thing, I just look at the close today. After all that up and down and all around, where did we close yesterday? 92.50. I'd use that as resistance because we're trading lower. And I don't think you're not gonna see that 71.56.
I don't know what you're going
No.
to see in this stock. I'm not even touching it today. After I
Yeah.
saw the debacle of the shorts, getting murdered from 5
Tough.
o'clock to 6 o'clock, and this was a debacle of a quarter. I'm just like out on this one. I don't know what to say. I'm not touching this thing. This thing can go wherever it wants to go.
All right. Enough time on that.
Yeah,
stock.
just a wild.
It was the wild one. It was the wild child last night. Everybody's talking about Tesla, but this was the wild child last night.
Yeah.
So-
So from 376, not even a year ago, it was August 376 to $68 last night.
Yeah, and now back to 89. Who knows? The thing's been oversold for a while, so maybe they just think this is the dumpster. Maybe they were banking this is the dumpster fire quarter where this
everything I see about that business is how bad that business is. I don't know if I've seen a bullish take on Carvana in a long time.
Well, we had CarMax too, which was a disaster ahead of it. So it's not even about just Carvana. The business itself, used cars has not been going, fabulously well here over the course of the last
Too expensive?
few months. Yeah, everything's too expensive, Joel. This is what's going to happen with a lot of different companies are going to have demand destruction if the prices stay high. So, but not Tesla apparently, because Tesla, everybody wants a Tesla. We're going to have robots. We're going to have robo-taxi. We're going to have all kinds of stuff. Spencer, talk Tesla.
Yeah, there was not a lot to hate in this report. The company seems to be running like a well-oiled machine as best they can in the global chip shortage, but earnings beat, and they reiterated their 50% year-over-year growth in deliveries. That's their full-year guidance, and they're on pace to do that despite what's going on in semiconductor land. Their margins came in above estimates. There will probably come a point where it's do or die on the full self-drive thing. We're clearly not there yet because all that matters is that this company has shown that they can produce cars now, that they're scaling up and they're doing it in an efficient way, and it's working for them. Elon Musk on the call, as usual, said a lot of things. The biggest comment to me, he said this before, is that their robotics thing is gonna end up being
bigger than the cars.
Bigger than the cars. I don't know if you believe that, and even so, I don't know how
hard
long.
to doubt Musk though.
I don't know how long that'll take to come true, but in the meantime, the company seems to be operating on all cylinders. Frankly, there is not a lot to hate in their report. The question on Tesla for years was, but can they make any cars? Well, they're doing it.
Yeah.
They're doing it now.
They're doing it cheaper than everybody else.
Yeah. So, I mean, it's working for him.
It's been working, and as much as I love Elon Musk, and I do love Elon Musk. I think he's one of the best innovators we've seen in a century. And as much as I appreciate that the cars are pretty cool, it's just been valuation for me the whole time. But I mean, the valuation doesn't matter if he continues to innovate and continues to find new stories. And I mean, the whole robotics story is another angle. So if we go into the robo taxis and we go into the robotics side of it, and he's saying that's going to be bigger than the cars, I mean, there's a whole another revenue stream. So those people who are saying that Tesla is a technology company, not a car company, are starting to be proven correct. So, and I've definitely been wrong on this. I haven't participated in any of this. I trade the stock all the time, but in the long-term portfolio, it's never touched because the PE is 100. But I'll tell you, the people who have had it have been absolutely right. The people who have been bearish the stock for a long time have been proven wrong. So am I chasing it up 75 points? No, we're not in the type of market where this is, and we could go to the rotations and talk in a few minutes, but the rotation yesterday was absolutely vicious. Growth getting hammered all day yesterday, value getting bid to, crazy bids, and some of the value. The Dow being up over 1%, the Nasdaq being down over 1%. That's not, what we see on a normal day. So the rotation is still there. I'm still more inclined to sell the pops on something like this because it is the growthy, high valuation stuff that the market's turned off of right now. But with that being said, it's hard to doubt Elon Musk.
Well, on the PE thing though, their forward PE is now below 100, and
it's unbelievable that they've grown.
It's come down. It's come down dramatically. I remember when their forward with the PE was like, I don't know if it ever got to 200.
They never had a PE for the longest time, burning cash.
Well, no, but like last year, I remember it was like close to 200. Something. Yeah. I don't know if it ever got there, but it was in the neighborhood of 200. It's below 100 now.
Yes.
I mean, it's come down. They're growing into this thing. So we just lost Dennis. So the PE is sure, maybe it's high compared to like the S&P, but it's looking more and more reasonable.
It's not a value stock by any means, but I get your point. Like, he keeps continuing to grow, and he's an innovator here. The bear case to Tesla, giving back 90% of it's just not on the table anymore, because you're never going to see this thing at a P of 20 or 30, because people just love the story too much. And a P of 100, it isn't reasonable by any means, but like to your point, it's as cheap as it's ever been relative to itself. Yeah. And here's the stock, from $100 to $1,000 in that same time period. So you think about if you were buying this back at $100 when there was the potential for this to be a value stock. I mean, you're laughing at it right now. You're right. Jason Raznick, right? Gene Munster, right? There's been a lot of bulls on this show, a lot of bears on this show too. Gordo's been dead wrong on this. So I've been dead wrong on this too. I mean, Joel, you still own it. So
yeah, small piece. But can I do just a quick rant that Spencer's not going to like?
Sure.
Okay. All right. Dennis, how you say you get like a bunch of hate on Twitter?
Yes.
All the time. Well,
yes.
A couple weeks ago, I was talking about Tesla, and I draw my lines here, and I give a level, and I give a level, and I keep repeating the level, right? And I say it several times. Well, one day, Tesla came up again, and I said, you know what? I'm not going to give this level anymore because I've said it so many times. All right. So I get I don't even file. It's probably a robot. It says, I just really want you to know that I thought what you said about not giving the Tesla level was very disingenuous, and that was, not a nice thing to do. And I really lose a lot of respect for you. You know what?
It doesn't
you
sound
can
like
kiss my ass.
Okay, okay. We're not gonna.
You know what?
We like everyone.
No, we don't.
Tell
me I'm disingenuous because I don't.
That's the worst thing you've been called on Twitter. You are blessed. If that's the worst thing you've been called on Twitter, you are blessed. Imagine somebody having the last name of Dick and then going and saying stuff about GameStop. You add that up, you get some really colorful, fun stuff happening. If disingenuous is the worst thing you've been called on Twitter, you are blessed.
All right. Note to self: don't call Joel.
Disingenuous.
By writing that down right now.
That might be one of the nicer things that gets said to me on Twitter sometimes.
Hey. Anyway,
and just to be my disingenuous self, just to keep with my character.
Yeah.
It's 1050 sticking out to me today. I
Oh, you
don't,
gave the number.
yeah, I gave the numbers. So and the only reason is it's kind of hanging out here in the pre-market, and then I think I see a couple daily highs at that area. Yeah, the actual high of the move is a pair of highs at 1076, but there's something going on at 1050 here.
All right, 1050.
There's some sellers there at 1050 here this morning.
Yeah.
But no,
Who knows where this goes to? This thing, it's going to be important that it does hold up, though, because this is the kind of stock that they are selling lately. And I do want to take it into the rotation here. I know there was a lot of other earnings and they were fun
Yes.
earnings, but I think it's very important to talk about the rotation that we saw yesterday in context of Tesla, in context of the reopening trade, the value trade. There's a lot of other stuff happening here, and we'll tie the airlines into this as well. But yesterday, you had the Dow up significantly and you had the NASDAQ down big time. I mean, ARKK made a new low on the move here. Not a new low, 52-week low, but a new low on this recent move. And that was on a day that the Dow was up 350 points. So you saw Square get absolutely hammered yesterday. You saw Roku, which obviously off of Netflix, getting hit. But you saw so many of those growthy, high P nosebleed names getting hit yesterday. Now you're getting a relief pop in a lot of those names off of Tesla. I think that relief pop is still to be sold. I do think this value trade has legs. I do think that these airlines, which maybe we should go to now, with what they said, and not saying that they've had a pretty good run, but they're going to rip here again because all these airlines are saying that
wow.
their bookings are as high as they've ever been. So there is definitely a movement into doing stuff. And this reopening trade, which we haven't talked about for a while, is starting to pick up steam here once again. I still think the economy is in trouble. I still think there's going to be less discretionary spending going forward. But I mean, you're looking at a separation here on what people are willing to spend on it. Right now, people want to do stuff.
I mean, United Airlines and American Airlines are both saying the magic words, right? Returning to profitability
Yes.
this year. UAL
Yes.
guided for record revenue.
It's crazy.
Not for the quarter that just ended, but that's their guidance. Is record that they're forecasting to see record revenue at some point this year.
Yeah.
I mean, yeah, Mitch just said it right in our just in our private chat here. The main thing that they both said is traffic has returned, passengers have returned. Business travel hasn't really, but in the aggregate, it has, right? Because maybe there's some overcompensation there from actual travelers there. But the magic words returning to profitability this year. Finally, we get a somewhat firm timeline on that. 2 years into COVID, and that's all you needed to hear, really, right?
And if you're a trader, this just kickstarted so many stocks. Some of them that haven't participated as much. The airlines have been running to a certain extent, so they maybe were already expecting this, which the market sometimes can figure stuff out. But I mean, think about a Boeing, like a Boeing which just hasn't gone nowhere here. You wonder if this doesn't give Boeing a kickstart. No position. But you just think like the airlines here. You got American Airlines up 10%, UAL up 8%. I mean, Boeing's been stuck in a rut here for a while. But you think about some of these names, and then you could go like, Carnival Cruise Lines. You start thinking if the airlines are kicking butt, maybe the cruise lines start to go because they haven't really been doing much either for the last month. I mean, RCL, NCLH, you start thinking maybe the casinos, which haven't done great either in the last month, maybe these things get kickstarted here today. So I'm saying if this airline rally really has legs, and we're going to find out after the open, I think you got to start looking at the reopening trade here for today at least.
We've been talking about
a
this
lot
for
of these
a
stocks
while.
could really get kickstarted by this.
We talk about this a lot on the show and just, the momentum. And Delta kicked it off, right, with their report. And then it's just everyone is following suit here with it. We're not back near post-COVID highs, so that's one thing to keep an eye about. But I'll just go specific to American Airlines today. This is a big move. I'm not going to, call the top here and say 2190 is the top. What I would say is that if I was long, I was looking to, cover maybe in the next few days. I'd really like to see what happens in the 22 handle. And the reason for that is going back to last year, 3 out of 4 months in a row, you had highs from 2208 to 2235. So 4 monthly highs in the same area after major rally. I'd be keeping an eye on that. Today, the next day or two, whatever. But nice rally, pre-market high, 2190. A pretty thick stock. It's already traded 6.5 million, so I don't think you're going to get the open keeping it down at all. I think you're going to open up pretty high. It's just to see if you can bust into that 22 handle.
Well, and there's just so many to look at here. I mean, all the airlines look like they're all going to break out. And I traded them last night after the UAL said that. I was like, I saw I bought AAL and I bought LUV. I bought Boeing, and I sold actually all those trades as day trades overnight. But now I'm talking so I can freely talk about them on the show because I don't have them now. I just traded them off the headlines. I can't make money off headlines, but I mean, obviously,
disingenuous.
when everybody tells you, "Oh, make money on trading headlines." Well, UAL just rips up 7% on their thing. I think AAL and the other ones may follow suit. Obviously, that was a money maker there last night. Am I chasing them here this morning? Probably not. The trade was right off the headline when UAL said that they were going to return to profitability next quarter. That was your green light to start grabbing them all. So now what do? Well, I think there's a laggard trade, like I was saying. I'd look at the cruise lines again. They're up 3%, but what happens is a lot of times people are like, okay, ring the register, and they pull in a little bit after the open. Maybe that's the time you strike.
Oh, that's tough. You're
Trading
probably
is tough.
better. Well, like stocks they're doing things like this. I mean, who's good at that is Jeremy. He can forget about the gap, and he can find something on the short term EMA or whatever. You know, it's just hard. I mean, you got to be really, really
Trading
good.
is tough, period.
Yeah. Oh, this is like
but
extraordinary
chasing
stuff.
is not like so.
Exactly.
I'm still back to the way I trade is that style, Joel. I mean, if I'm bullish a stock and it goes like this parabolic, I'm not chasing and I'm waiting for that pullback to give me the chance to get in, because rarely do stocks just go boom. They go da 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 da. And even on an intraday basis, they do the same thing. So I know I'm not a big intraday fan, but they're waves. A lot of times it's waves because you get the profit takers and then it comes back in and it gives you a chance. And that's when you strike. So if you have a bullish thesis, you wait for that little intraday pullback and that's when you strike. I'm just saying I kind of have a bullish thesis going here for maybe not American Airlines because it's already gone and priced in the leaders, but the cruise lines, the casinos, I think there could be a little bit of a catch-up trade, even with Boeing again, if it was to pull back a little bit more here, or maybe not open that high. Sometimes you get the stocks and they just don't open that high, and they give you a chance that way as well.
I know everyone is like made $1 million when Boeing went to 90 and ripped it up to what 280 or 300 or whatever, but you got potential consolidation going on in the industry. I just don't think they're going to be rushing out, and they're still losing a lot of money. I think they're going to get the maximum capacity out of the planes that they're having. So, I mean, you can hop on the Boeing trade. There's definitely, good, this is good. And they're associated with the airlines. It's just, I don't know. I look at the consolidation. I think we're going to go towards smaller planes, and I've still been looking for, a company that makes these more intermediate planes. But yeah, so Boeing, I'm not going to touch the levels on Boeing. I just want to talk about, before we move on from the reopening trade, you have to be concerned if you're a Disney shareholder.
Yeah. Yes.
I mean, holy mackerel. I mean, I know the Netflix, the streaming thing. I don't know how much the parks is part of their business, but man, oh man, I mean, if this stock is not going to rally now, I don't know.
It's an important day for Disney, I think.
Yeah,
if we see a reopening trade happening here, you need to see Disney go today. And if it doesn't go today, that's a problem. I am long Disney. I've been long Disney for a long time. It's been the wrong trade. I did buy more Disney. It's been the wrong trade. It's been wrong to buy a lot of stocks. It's been a tough investing market. I know nobody on Twitter loses money, but I mean, I got slaughtered in that Netflix trade that I had as a small percentage of my wife's portfolio yesterday. Ackman ate it yesterday and sold it yesterday. I mean, it's been a tough investing environment. And as much as you can say, oh, wow, the Dow was up so much yesterday, to the point, ARKK closed on the lows. I mean, right on the low tick, 56.13. You get the relief rally in ARKK here this morning because of Tesla. But I mean, the path of least resistance for all of these high super growth, techie type disruptive technology names is probably still lower. So it's hard to own any of this stuff.
What do you
There's certain stuff you can own, and there's certain stuff you just absolutely is just crushing you. And it's the higher multiple stuff besides Tesla. It's the higher multiple stuff that's just not performing.
do you think Ackman is gonna maybe go back to short selling? You know,
I don't know if
he
anybody,
well,
none of these activists want to
he-
go back, or none of these hedge fund managers want to go back to short selling, because the fear that, you know, they disclose the position and all of a sudden everybody jams it, you know, and they
Yeah.
get a hold of it and Reddit gets a hold of it and they jam it on them. They're all scared. I mean, and this is to a certain extent why the market is a little bit more volatile at times when you don't have the short volume in there. I mean, you still got your market makers that are going to short stocks. You still have firms like ours that are going to short stocks. But you build up these huge short positions where, you know, you're 2, 3, 4, 5 days of volume, and then it gets disclosed and then they ram it on you. It's a dangerous market to have huge size short positions in any one individual name.
I don't think Ackman said he was done shorting. He said he was done activist shorting, which is
Okay.
which is
Spencer was thinking maybe he and we've gone back and forth on this. I know when I talked about Warren, you said Warren doesn't do any hedging. I mean, Spencer said maybe he had some protective puts on this. I mean, you don't have to disclose
I
that.
mean, we don't know.
He never does that.
Okay,
It's not his
I told
style.
you Dennis was going to say that. Okay,
He doesn't do that.
All right.
It's not his style. He's bearish something to sell. He sold all the airlines. We know Warren bottomed them. He finally sold all of them, and, you know, obviously that was, you know, near the bottom. So he didn't. Warren didn't do great on the airlines, but he does great on everything else. So we're never going to be 100% right, folks. If you're sitting there with a 100%, you know, record, you know, you've never had a losing trade here, it's probably because you refuse to take the losers, and we know eventually what happens. So don't be afraid to admit you're wrong, take your losers, and move on. It's the only way you have longevity in this business.
Also, when it comes to, you know, owning individual stocks, only you know how much pain you can take, right? Like people, I get asked every single week about SoFi. You guys know that I own a bunch of cannabis stocks too that have all had rough years. But they're all very small portions of my overall portfolio. Collectively, the cannabis and the SoFi, it's like got to be less than 10% of my overall portfolio, right? And that's among 5 different stocks, right? So only you know how much pain you can take. If you can't take a 50% haircut, then that's okay. Then sell, right? But the pain tolerance is unique to everyone, right? And that's part of the game. That's what individual stocks, that's what they do. That's what they can go down 50% on you. They will. So
There's always going to be something that hits you. It's why it's important to stay diversified. And
right.
I've always been an advocate for not only staying diversified in your long-term portfolio, but also in your trading account. I rarely put more than 3 or 5% of my capital into any individual day trading idea, because you know what? A halt can happen. I've had it happen to me 3 times over my 22-year career, intraday, where I've been intraday halted, and I've been short of stock. I was short salging. In my day trading account the day that it got halted and taken over. And I lost 60% on that day trade. 6-0. What did I do? I ate it right away. But I mean, if you were all in, I can't take a 60% haircut. So I probably had 5% of my money, you know, my day trading account in that. And then I lose 60% on that 5%. Well, that's still only 3% of your account. So you can eat that. But if you are all in on a day trading idea and all of a sudden that happens, you know, it's just bad luck. I mean, there's a luck factor involved on any given trade as well. Don't kid yourself.
Wasn't there a Humana trade too? Was it Humana, or there was some kind of deal going through?
I don't remember
and
Humana.
the deal fell through. I don't know if it was Humana. I can't. I remember one that was worse than that. It was overnight. A deal fell through or something. Well, whatever.
Yeah, I mean, you're gonna be caught on the wrong side of news. You're in this business long enough, even if you're just an intraday trader, eventually you will get caught in a haul. Eventually, you will be on the wrong side of some news, unless you're just trading S&P. Maybe if you're just an index trader. But if you're trading individual stock names, it's inevitable that you're going to be caught on the wrong side of news. I'm caught on the wrong side of news every single day, because sometimes I got 100 or 200 overnight positions, and I just happen, you know, and then you work out of it as best you can. So I do a revaluation when I'm caught on the wrong side. It's not like, oh, I'm trying to scratch my trade. I'm like, okay, I'm long a stock. It got downgraded this morning, and I was long it overnight. So now what do? Well, I analyze. I'm like, well, that downgrade is probably worth about 3%. So if I can get out for a 2% loss, I'm saving myself 1%. That's how I see it. So I would see myself as trying to work out of that trouble by saving myself on what I think it's worth. If it's down 6% and I feel it's only 3%, then I might be like, well, I'm going to hold back because I think it should come up a little bit because that's an overshoot. So I mean, but that's the quantitative approach that I take to the markets. Every single thing I'm doing, I'm a quant. Don't kid yourself.
I'm
a
little.
quant.
You're a robot.
All trading traders are quants. We're quants and we're stat arb. We're looking at statistics. We're analyzing. We're short long. I mean, we're doing a quantitative approach to the markets, but I think everybody needs to do that to a certain extent, and analyze, your quantitative approach. Even to Spencer Israel's point, you've got to analyze just, even in your individual holdings. If you have all your money in SoFi, I mean, you're doubling down. And I mean, doubling down works great to bring up your winning percentage, but it doesn't always bring up your trading account. I mean, sure, a lot of times they come back and a lot of times you average down and then you get your money back. But that time you don't. That time you keep adding to that loser and it keeps going down. It's trouble.
I don't have any stats to back up what I'm about to say, but I know that for every stock that drops 50-60% and then comes back, there's probably 10 that don't come back. I mean,
sure,
right? So yeah, if your whole idea is you're holding this for the long term, you're holding this for the 50 bagger that you think it is, and you're willing to stomach that 50% haircut in the meantime, fine. But you'll be wrong more often than you're right, because most stocks that for every Amazon that fell 90%, or AMD, right, or Microsoft, there's 10 that never made it back, right? It's just the way the way it is. So that's kind of just the way it goes.
That Kathy portfolio, and there's a reason she's probably down to like 35 names and she just have like 70 or 80, because she realized, and she's smart for doing that, she's getting rid of a lot of her junk. She's realized, and she's eating losers. And you know what? Maybe she's learning. Maybe she actually is learning, and maybe she's, doing more analysis and then getting the ones that she really believes in and going with those. And that's been a good approach for her for a while, obviously, and then obviously fell apart. But I mean, just buy everything growth and just hoping everything goes. So I guess, they're doing more research figuring it out, but I don't mind her taking losses.
Do we have Cameron, or because
we have Cameron here? Yes, Cameron Dawson. Thank you for the keeping us on track, Joel. Cameron Dawson, Chief Market Strategist at Field Point Private, is here. Let's get her on the show right now. Cameron, good morning.
Good morning, guys. How are you?
Good. Welcome back. Thanks for joining us. You know what we haven't talked about today at all yet? I'd be curious to get your thoughts on this as well. Is just yesterday's overall action. The way you had like the major components in the market, just some of them got absolutely crushed yesterday. And in the aggregate, it really wasn't that bad a day for the indexes. I'm curious what you think of that.
Yeah, we saw some of the weakness was really contained in just the tech parts of the market, and where you could extrapolate, hey, Netflix is having weakness, and so other areas that might be similar are having weakness as well. And because Netflix's move was so large, that's what pulled down the Qs. I think we continue to see rallies in inflation benefiting areas of the market, like in energy, and then in some of the more defensive areas. So I don't know how much to read into it, because we're still, even in today's market trading, we're still caught in a fairly tight range that we've been in for the past couple of weeks, with really no movement to break out to one side or the other. And so we just continue to be caught in this chop.
Yeah. On that note about tech, right? You posed the question here: is it the end of an era? We know that everything is cyclical, right? Everything comes in favor and out of favor, and time is a circle. We were coming off this 10-year period of dominance by tech. It's come off now in the last year and change.
Mm-hmm.
So going forward here, what sort of things are you looking at as it pertains to tech?
Well, To call for the end of an era in tech is not to say that these aren't great companies that can't continue to outperform on an earnings basis, right? A lot of these companies have better free cash flow, better return on invested capital, but we have to appreciate just how beneficial the liquidity environment has been for tech names. And one of the points that I try to make is that you've seen incredible outperformance on an annualized basis each and every year for tech names. It's been 30% for the past 3 years on an annualized basis that tech has outperformed the market. But if you look at just the past 2 years, or really 2019 to 2020, that annualized outperformance was 47%. And that 2-year period is so important because that's when the Fed started throwing liquidity at the system. All of the super accommodative Fed actions that we saw in 2020 and 2021 really started in 2019. That was the Powell pivot. That's when Powell said that we're going to not have the balance sheet runoff be an autopilot, and they ended up cutting rates in 2019. And that caused the rollover in real interest rates. And the end result was that you had tech growth, long duration multiples start to surge to the upside. So I think I showed the chart in the deck that talks about how tech actually used to trade at a discount to the market. I mean, this seems wild in this world where we've all kind of gone on to this idea that tech is just superior to everything. But prior to 2019, tech traded at a slight discount to the market. So after 2019, it started to trade at a big premium. It got up to a 30% premium at the peak in last year of liquidity and tech optimism. But that's only fallen to just 20%. So we think as the Fed continues to tighten, as real interest rates move higher, the end of the era is really about tech multiples coming more into line with the rest of the market. It's really not an argument about earnings because we do see very strong secular trends for these names. It's just what's the premium you're willing to pay for them in a tighter liquidity environment.
At what point, and obviously there has been some repricing here in the really high growthy stuff. I mean, at what signals do we look for to say, okay, well, we've come to reasonable valuations. It's coming enough now that maybe we can start nibbling our toes in tech, or has this just been so, outperformed for so long that it's going to take a lot longer than we think?
Yeah, I would be nervous to use the parallel of the 2000s for large big tech as the pathway forward, right? Because that parallel would say that there's a lot more room to fall for a lot of these names. I think for large tech, that we would look for something that would look more like a 5 to 10% premium versus the rest of the market as a good signal, really, or where it would be truly washed out. So that doesn't mean that you can't start buying on the way down. Let's take software names, for example. They traded at a peak of 33 times back at the end of last year. It's now it fell to about 28 times during the early correction at the beginning of this year. It's bounced back to about 30 times. But back in 2018, 2020, 2016, those names got down to the low 20s. So if you look at software in aggregate, we start trading at 25, 26 times. That's probably a good buying opportunity for the long run for names that are rather strong. Now, and have great growth potential. Now, I think we have to think about those speculative names, those very, very high, called infinity multiple names differently. That's where the parallel to the 2000s probably is a lot more apt to use, where you're in these downtrends. Yes, a lot of these names have fallen 60%. They can stage huge counter trend rallies to the upside. They hit overhead resistance into a downtrend like we saw with ARC just a couple of weeks ago. And I think that's an area where if you see rallies, that it's unlikely that if we don't see any sign that we're actually turning into a new trend change, that you should be really using those rallies to sell. Because at the end of the day, the liquidity environment that allowed those names to outperform, which was deeply negative real interest rates, lots of quantitative easing, lots of support for markets in general, that liquidity environment has gotten completely flipped on its head. And so it's no longer your friend if you're an owner of very high multiple, very speculative names. So rallies really should be sold in those areas as a risk mitigation strategy.
So if we're staying away from high growth tech, where would you hide in this environment? Like what? Because we have a lot of our listeners are long only, so it's not a matter of like going and shorting tech off this. What areas can you hide in? I mean, the commodity trade seems overbought, and some of the value names like Berkshire Hathaway just continue to outperform. Do you continue to hide in just value? Is that where we should hide in this environment?
Yeah, the trends in value look a lot better on an absolute and relative basis. So I think fishing from those value ponds makes a lot of sense. And I think the one key strategy going into the next couple of months is that this is not the time to try to buy falling knives. This is not the time to be a hero and buy something that's been washed out or in a weak trend. Really look for strong relative trends, and that could include some energy names, and of course being very aware that you're going to be very sensitive to oil prices and all of that, but looking for names within subsectors, sub-industry groups that are in strong relative uptrends seems to be a winning game. The other thing to consider is that we are late cycle. This is purely a late cycle environment, which means that you have to focus on quality. And it means that your returns are simply going to be lower. It's not the exciting time coming out of 2020 where you could have super normal returns and 100% gains in just a couple of months. That time is behind us. And so we end up having a little bit more of a boring environment where it's about being a little bit more defensive, focusing on dividends. High dividend paying stocks are still trading at 20% discount to the market. That discount, they used to trade at parity prior to the Powell pivot that we talked about in 2019. So that discount should close. Now, the reality is that it's likely that the rest of the market comes down to the valuation of the high dividend payers instead of the dividend payers going up. But it does mean by focusing on those areas, you're not exposed to the risk for multiple compression, which likely happens in the high growth areas. So liking traditional late cycle plays, which would be energy, utilities, which are getting a bit expensive, looking in selective industrials, you have to be really careful in that space. Probably overall, there's still room to go on this trade from goods to services. We're seeing that in the airlines this morning. There's already a fairly big spread between things like specialty retail, which would include goods like Home Depot, Lowe's, and those names are down 20% year to date. But the airlines are up probably, as of this morning, closer to 10% year to date. So you already have a 30% spread in there. There might be some more room to run in that trade, as it likely we're just getting started in this shift from goods to services. But again, it has to have that quality overlay and valuation discipline, because in this environment, taking flyers and buying really expensive names or low quality junky names is I think quite dangerous.
We're on the line with Cameron Dawson. She's a chief market strategist at Field Point Private. Cameron, I think the biggest debate in the market right now and market participants is fundamentally is rising interest rates, right? And there is a point where rising interest rates have an impact on the economy, right? And so there's this foregone conclusion that we are heading into a recession because of the higher interest rates. What indicators, I know the true definition of what a recession is. What are you looking for this looming slowing of the economy recession? What indicators do you use?
So we've been on the brink of falling into negative growth territory all year. If you look at the Atlanta Fed GDP now, it has bounced between 0 and 1.25% all quarter. And so we are already starting to see signs that we are in a period of much lower growth. So the recession indicators, the first one we can talk about, of course, is the yield curve. And I think it's important to kind of break down what the yield curve can be telling us, because one of the things that has emerged over the last couple of weeks, given the yield curve inversion in the 2s, 10s curve, the 10-year minus the 2-year, is that we aren't seeing recession signals because of the 3-month 10-year still remaining really cheap. Now, this is very misleading, because the 3-month just tells you where the Fed is going to be in its Fed funds rate within the next 3 months, whereas the 2-year is telling you kind of the 2-year sum of where the market thinks the Fed funds rate is going to be. It's a very simple way to look at it, but helpful, which means that the 3-month is low today because the Fed has only just started tightening, but the 3-month will rapidly rise, meaning that 3-month 10-year spread will rapidly fall as the Fed delivers on rate hikes. So we don't think that it's the right thing to say, oh, the 3-month 10-year is fine, we're perfectly okay. It really is just a function of how behind the curve the Fed is. Now, when we think about the recession risks, we have to look at the labor market, and the labor market still remains very tight. We still have near record job openings. We get the new JOLTS data on May 3rd. That's the date of the next Fed policy meeting. So that will be important to watch because the Fed is telling you we think we have lots of room to tighten policy because job openings are so high. So the labor market looks okay, but then we have to think about spending and consumption. And this is where we're starting to see signs that things look a little bit shakier. So there was an article that came out in Bloomberg this morning that talked about how a full half of student loan borrowers say that they couldn't make a payment on their student loans if they had to today. Okay. Which is incredible. We've been in this student loan
It's a good thing they don't have to today. If they're
well, they don't, because a lot of people don't realize that we extended the student loan moratorium to August, meaning that back it was on the 6th of April. They did yet another extension. It's been extended many, many times since the beginning of 2020 when it was first put on hold. But what we're seeing is signs that consumers really are starting to come under pressure because of inflation. And the chart here is so interesting because a lot of people have been trying to scratch their heads saying, why is the University of Michigan Consumer Confidence Survey so weak? It's the weakest it's been since 2008, 2009. And yet they're still buying. People have great jobs and house prices are going up. Stock prices are still fairly high. This isn't consistent with a very weak consumer environment. Well, the reality is that this University of Michigan number plummeted in April of last year. April of last year was when real wage growth went negative, which means that for a full year in aggregate in this economy, prices have been growing faster than wages. For a full year, consumers have been losing purchasing power. And that was okay at first because consumers had a big savings buffer. We had all the pent-up savings that consumers built during the pandemic. But the stat, and this comes from Mizuho's chief economist, the stat is that of that $2.5 trillion of excess savings, 2/3 of it is held by just the top 10% of consumers.
But then Cameron, it's also true though that how people feel isn't necessarily always a great indicator of future economic activity. In fact, very often it can be a contra-indicator of activity because
I mean, if you bought the last times that UMich went to its lows in 08 and 11, great buying opportunities. But this gets us back to, I think we talked about this a couple months ago, which is that watch what people do, not what they say. Yes. It's consistent with the fact that you see investor surveys being incredibly bearish and very, very indicative of or consistent with strong forward returns from here, right? When you get super bearish, great contrarian signal. The problem is that people really have not been selling. People really have not been moving into very risk-off assets. Well, here we have the TLT, which is a risk-off asset. This is a little bit of a different story, but we haven't seen a big move lower in equity positioning within portfolios. We haven't seen a big move lower in margin account balances. They've only fallen by about 8% in the last 6 months. This is pretty wild in the context of a lot of retail names that have drawn down 60% plus. And so we haven't seen that kind of rush for the exits that we would normally see when sentiment is this weak.
Cameron, I always thought you were a good guest, but now that I know that you're a huge Michigan fan, now
No.
you move up to be one of my favorite.
No,
one of my
no,
favorite
no.
guests. Go
Wrong-
blue,
wrong-
Cameron.
See,
Go
oh, wait.
blue.
Conclusion. Wrong conclusion.
Wrong
Easy,
conclusion.
Joel. I'm a Florida person, so
No, the conclusion here
Yeah,
was
wait,
not,
she kept saying Michigan, Michigan. I was going to sing the fight song.
no.
Michigan sentiment.
The conclusion was that whatever comes
It's
out
a
of
big
Michigan
difference
is not
between.
to be believed. Is what we just.
That's what Joel reads out of that when he
Yeah,
hears
right.
Michigan. He thinks
Yeah.
blue. He bleeds blue though, Cameron. So
All right, Cameron Dawson, Field Point Private. Always appreciate you taking the time to come on our show, and you always come well prepared with plenty of research and data to back up what you're saying. So, Cameron, have a great rest of your day. Have a great rest of your week, and talk to you again soon.
great.
Thanks,
Thank you,
Cameron.
guys.
All right. I had something to add to that, and I don't remember what it was now. So anyway, let's go to ticker time here and drop some tickers for us in the chat. And then Dennis, I would just like your thoughts on the question I posed to Cameron right off the top there, which we didn't really address at all on this show, which was just yesterday. Joel and I were
Crazy, yeah.
very impressed with the overall market in light of Facebook getting crushed, Netflix getting crushed. Tesla was weak into that report, right?
Yeah.
So a lot of red at the top of the screen, but overall it was pretty good. What'd you make of that?
I mean, it was just the rotation. I mean, you had a lot of individual names, just sector rotation to a ridiculous level. Like I said, a lot of those names in ARKK closed on the lows, but then you had so many names that were just so strong. I mean, the cyclical trade is still performing, and you actually had airlines up ahead of this reports, and now they're up even more. I mean, this market is all about the rotation right now, but it's all about still the fade trade in there, and chasing moves has not worked in 2022, and I think that continues to be the case. So I'm skeptical of just chasing an S&P rally here when you didn't have participation from the Nasdaq whatsoever yesterday. I'm skeptical of just randomly jumping in the commodity trade here now because it is overextended, but it has continued to work. So I think you just are in an environment where you've got to keep taking the money, as you get it, not sitting around. If your stock goes up 10%, don't sit around waiting for it to go up 20. Take the money and run. That's the kind of market we're in. We're in the take the money and run market.
That's it.
Okay. I want to talk Nucor from the chat.
Yeah.
Nucor with the best quarter ever. And I mean, this has been a huge holding in my long-term portfolio for a very, very, very long time. And I actually sold half of it a couple of days ago. One, because I didn't want to take it through the quarter, but more so, it just feels like it's as good as it gets. I feel like we're in this environment where steel, I do believe that the economy is going to start to slow and some of this demand destruction is going to start to happen. And I think you're going to have less demand for steel 6 months from now. So I look at this and I see a stock that has went from $50 to $169 because of the pull forward of everything. And obviously, you saw what's happened to home builders, and it's interesting the disconnect just because commodities have been so hot that Nucor, Cliff, X have all been performing. But Nucor comes out best quarter ever, $7.67 this morning versus the $7.29. But if you look here, stock not rallying. So that is concerning. I still have a good chunk of my position, but like I said, I did sell, I think over half of it actually a couple days ago. So, and booking a really huge gain off that too, which means I think that there could be some troublesome times ahead.
Yeah, it was
down day yesterday on pretty good volume at a strong market. So that indicates sellers out there. The true sellers, they're trying to get out between 172 and 173. You have to mark an area, higher price, a little bit thinner stock. I'd only get not concerned, but keep an eye on yesterday's low. You see these stocks, they get hit, they don't immediately react. I would see what happens at yesterday's low. If it holds yesterday's low, then hey, why not go back and test the close? It does 69 and a quarter, and then perhaps that all-time closing high at 171.83.
And Nucor, to Dennis's point, said they just had the most profitable quarter in their history. So
it's a company that is firing on all cylinders. I mean, and it's been a fabulous stock. But you got to give it perspective. I mean, these are huge, intense moves. Like bring up the monthly on Nucor. How much good, and again, this is a cyclical business. It's not like they're just going to continue to make $7.60 every single quarter going forward. I mean, look at this move relative to what the stock did for a decade. It went nowhere. Now, all of a sudden, it triples in less than a year. I mean, at a certain point, you got to just say, hey, I got this one right finally. This has been a gift, a participation in the commodity trade. And you start rating the register. I still held a chunk, so I didn't sell it all because, wow, it's just been an unbelievable performance. And it could still continue to go up. But you start looking at what the home builders have done. Bring up the home builders charts. I'm not saying that all steel is homes is different, but infrastructure, you're doing different things. Like, I just think like eventually you could start to see that happen here. So where you've got the XHB, which has had this incredible move, and now all of a sudden it's like, well, people don't have the kind of money to build a home. Do businesses still have the money to do different types of buildings and stuff? Yeah, that's still going to go on, but maybe it goes on a little bit less. If we do get into a recession, don't kid yourself, steel stocks will get hit. So if I'm of the feeling that I think that there's a possibility of a recession, it's time to take some of this money.
All right, quickly, some stocks from the chat here. Las Vegas Sands got to mention from Michael Smith, and I mean that fits into the reopening trade, so it hasn't really done anything really since the start of the. Well, actually, it's going back several years now. That's been a bit.
LVS.
Yeah.
I mean, it just you look at the long-term trend of these things. I mean, if you're going in for a trade and you're looking for a pop, but I mean, just a long-term trend. Just even before the pandemic, I mean, this thing was $80 in July of 2018, right? So whatever way you stack it up on a relative basis, this has not been a place to put your money. Now, like Dennis said, you can trade anything. If I had this on for a trade, I'd be keeping an eye just over $40. What's that?
Yeah.
40 and a half, something like that. I look at that as resistance. If it takes it out, you got another leg higher. But just long term, I mean, these things have just, they haven't been great performers. So why all of a sudden? And look at Penn. I mean, this whole gaming thing, Penn and DraftKings, we're supposed to, the greatest thing in the world, sports betting. And look at this. I mean, these have been perhaps the worst investments since the middle of 2021.
Well, it's valuation, Joel. It's valuation here. And we've been
but Sean Udall says they're making tons of money, but they're spending tons.
To DKNG, does not make any money,
No,
Joel. So that's just, Sean Udall's not
revenues. I'm sorry,
DKNG is burning cash.
Yeah.
So again, this 2022 is the market that does not like stocks that burn cash. Tesla doesn't burn cash anymore. That's why it's getting a pass.
Exactly.
It's a pass. It's a huge component in the S&P, which I talk about every day. In my index arbing, I'm trading it all the time. So I get what's holding it, like what holds that up to. But again, to Spencer's point, it's still growing money and it's actually not burning cash anymore. These businesses that are not making money right now continue to get hit, and they continue to get hit hard. So, and I mean, ARK is full of them, and I keep going. People say, "Why do you go back?" Because it's telling you it's just a good index for high growth companies that don't make money, because the majority of companies that she owns, besides Tesla, are that. So it's just a good index. It's like, why do I talk about Warren? Berkshire is a good indication for value. So when you look ARKK versus BRK.B, you can clearly see the divergence where value continues to outperform, to Cameron's point, and growth continues to underperform. And I don't see that changing suddenly here. People keep waiting and trying to time the bottom. But maybe this takes a lot longer than we think it's going to take. I mean, yeah, some of these stocks have been going down for a year. Some of these stocks should never have been where they were, though. And some of these stocks are never going back to those prices. So we're not going to have a 200 EV companies that are all making EVs and we're all going to have 10 cars.
No, but we'll have one.
Yeah, I mean, that's it. And to this point, like, this is how much I'm worried. I sold my Ford yesterday. So I came in and I actually sold my Ford yesterday, and I sold half of my GM as well, because I just look at it, I was like, who in the hell right now, maybe this is short-termism. I did keep part of the GM position, but maybe it's short-termism saying, but I look at it and I'm like, I love the EV story there. But I'm like, who's buying a $95,000 pickup? Who's got the money to do that? So I'm like, I got to think that their next quarter is going to suck.
You know what? I got to hop here after a 3-day hiatus. Pre-Market Prep Plus is back, and we missed hundreds of symbols in here. So I'm going to hop. I'll let you guys finish it up. Triple D, give me a call after the open, okay?
Yeah, Joel's over at
to Dennis's
premarketprep.com.
point,
I'm just, I know you got to hop there too, Spencer, but I just want to finish my point. It's this huge high ticket discretionary purchases. Like the homes were the first one to fall, and you've seen what's happened in the home builders. But I think anything you're getting, people are going to still buy. They're going to travel to a certain extent. I mean, people want to go on a vacation. They've been cooped up. But, if you're thinking about going and buying a new $95,000 pickup, I think a lot of people would love to do that. I don't think a lot of people are going to have the discretionary income to do it. So it's one thing for a $50,000 pickup or 60, but I mean, and maybe I'm talking Canadian prices, but the F-150, the new one, is sitting on the lot, and they want $90,000 for that thing, so like 70,000 US. I'm like, that's like, I bought my last F-150 2018. I paid 60 Canadian, so like 45. Yeah. I mean, the price is up 50%. It's crazy.
To your point about Ford and EVs, did you see the chart from Tesla's thing last night about
no, do you have it?
Their orders from the day after the Super Bowl? There was all those ads for other EVs.
That's awesome.
Not Tesla, other EVs.
Yeah.
And it directly benefited Tesla.
Yeah, because Tesla's just synonymous with EV.
Yes,
I mean, Musk has done everything right.
No,
you can hate the guy.
He has not done everything. He's done
on Tesla's front. When it's with not his own personal life with what he tweets, but on the Tesla front, there were so many doubters. People on our show saying it's going to zero. A lot of people. I said all along I didn't think it was going to zero. Remember, I wrote the 100 puts, so I was of the opinion that it could go up. I never thought it could go up tenfold.
I was skeptical too because you didn't know if they could do it, and they've done it. So good for them.
Good for Tesla.
We gotta hop though. I misspoke yesterday. Today is the day where Mike Tyson and Ric Flair are speaking.
Oh my God!
Woo! Cannabis Capital Conference. Day 2 is already live. We're gonna end this show. Send you guys over there. I'll be back at 3:30 for at the close. Catch you guys later. Have a good.
I eat some of those ears, those gummy ears.
Give
me telling somebody down there to bring me back a pack of gummy ears. I want those pack of gummy ears.
Okay, congratulations to New Jersey. Cannabis legal sales start today. Go get some if you're in Jersey.